We'll also be streaming this on Facebook to our audience there. So it's my pleasure to be kicking off this third Ramadan night with new funds from the region. Today, our guest is Yagub Alserkal, co-founder and managing partner of Spartech Ventures, one of the new funds in the region, and he's also has a long history of investment activities, whether that's family office investment or sovereign investment, and we'll be hearing more about that from him. I'll just remind you, we'll be going through and having a chat, but we welcome any questions from the audience. Please feel free to ask through the Q&A feature, and we'll take those questions as we go along. But with that, I'll start, Yagub, by asking you actually to introduce yourself, please. Give us a bit of your background and how you got to where you are today, to being an investor, a VC, sorry. And I know you've been an investor for a long time, but a VC.
Yeah, sure. I mean, look, it's sometimes you have plans, sometimes life has a plan for you, and it's a bit of both in my end. Just did finance and marketing, double majored in my undergrad, and then it just so happened to start an investment banking because I thought it was something interesting to learn about. I thought it would be the natural option for me, so I just did it. And I just came back from Australia, joining Deutsche Bank over here. It was an eye opener, different industry.
The one that left.
Susanna, can you please? Thank you. I don't know what happened there. So basically started off with Deutsche, just working round the clock, the investment banking lifestyle, and I loved it. And from there, curiosity started to kick in, and each deal carries with it a bunch of learnings, and about the economy, about the industry, about all of that, and it just you get used to it. You just go from one opportunity to the next, and it's a new book each time. And I just fell onto that, and then from there, tried to maintain my relevance to the industry, and then just follow my curiosity and opportunities at the same time. So I joined Emirates MBD Asset Management. After that, I was raising capital from different institutions and high net worth individuals just for a year. Just had fun doing it, learned a lot, the social aspect, I guess. And then joined Moderator to do semiconductor M&A. So that was a new chapter. It was very specific M&A in a very specific industry for a very specific company, which is Global Foundries. Very, very lucky to have worked in that space between Silicon Valley and Abu Dhabi mostly. So fortunate our country is doing all of that. I mean, we're just, kind of children of this beautiful country and trying to do the best with the opportunities we're provided, right? And, 4.5 years of just very specific semiconductor M&A. We acquired IBM Microelectronics, a bunch of learnings there. And then another opportunity opened up that touched on those interests of mine, and it was private equity. Mostly through Moderator Capital and a team called Sovereign Investment Partnership. So that's cross-border investments. And then that was a lot of learnings too. And, got the opportunity to help, to work with the team and manage the 6 billion commitment into Russia. That was a good reason to learn a language as well. So that made it even more exciting. So just curiosity, I guess. And we deployed a good amount, made good money for the country. Then Kazakhstan was an opportunity that I saw to set something new up. And at that point, once this was set up and we did deploy some capital in that beautiful country too, I just decided I was ready to take a risk, and just jump, just really preparing all the time in my mind for that day to come and maybe break out and do my own thing, and then I just jumped and started, just a tax company, which is very, not directly related to investment, but I thought it would be good to grab market share, manage, a corporate, so to speak, and just kind of get that feel, of what founders and CEOs feel like.
Operate that business, because there's
Exactly.
something that is totally different about operating a business than investing in it. No matter no matter how close you are, it is not the same.
Exactly. And all these pressures just make, just it forces you to grow. They force you to grow in certain ways, So I noticed that change and I was observing it. But, a year into it, and that was always the plan, was to start an investment platform. But it was a good year, working with over 300 companies on their VAT filings. It gives you a good sense of what's going on in the market. And, from there, I saw how people, kind of manage their deals and how the industry is looking like. And we, and I met amazing people, partnered up with a guy called Sach, who's a friend and a brother. And then Omar on the Spartech venture side. And from there, the platform started to grow. And that was coming back to my passion. Initially, we came out with 3 verticals based on what we think we can add in terms of value and excitement. So that's the startup scene, a family-oriented vertical, and a placement vertical. We started with startups. We were very selective, although we were signing contracts and getting paid to provide a service. But we were very selective, and we had a funds mindset from the beginning. We advised startups, we raised capital, we saw some grow. We're seeing one growing in Saudi Arabia. So we also saw it from the lens of founders in startups over here. And, we met our colleagues, the VC funds over here. You learned a lot. They're amazing VC funds over here. But we saw a place for our strategy. Differentiated in.
Well, so tell us a little bit about this. Tell us a little bit about Spartech and the thesis that you have, right? What kind of sectors, what kind of geographies, what kind of ticket size that you're playing? Give us a little bit more information on that.
Yeah, sure. Look, ticket sizes are growing as we are raising more capital. When we started Spartech Ventures, this was around a year ago, a year and a half ago, give or take. And we raised our first, let's call it $5 million in the beginning. And then the lockdown happened, right? And once that happened, we decided, we decided to, hey, you know what? Let's invest. Let's do what we love. Let's do what we're good at. We have a fully set up IC. I'll tell you about the criteria in a second, but let's invest. And it was great opportunities. And we did that, we did that. We've invested in around eight companies so far. Ticket sizes varying between $700,000 and $300,000. We did a few $100,000. We have a very stringent criteria that we follow and an independent IC that we're very proud of. And they're very tough on us. We like that. So what's our criteria? Look, in a nutshell, we're geography agnostic, yet we're very MENA focused. We aspire to deploy mostly in MENA, but we realize that the tech adoption and the availability of deep tech and so on, it's not all here. So we position ourselves, and I think we're naturally positioned to be between geographies and between continents. And we're doing, some of our investments right now, are preparing to come to MENA with our help. In terms of the stage we invest in, we try to be very specific. So we invest in post-revenue. And once we see a product market fit, just the core revenue model, generating that revenue. And then at that point, we like to bring all of our different expertise on the table. We've got Omar set up the turnaround function of Deloitte over here, invested over $100 million for Majid Al Futtaim, helped restructure Rocket Internet's portfolio in a certain geography. Sach worked, amongst many other things, in the Oxford incubator, worked with our friends, Beko Capital, and then managed his own retail-based fund. And he worked in infrastructure before. I bring semiconductor, private equity, infra, and then founder experience, I guess. So, to assess kind of the moat around the business, we have very interesting conversations. It's always fun to discuss those opportunities. And as you would know, Omar, it's, a lot of businesses are just amazing. Sometimes you cannot, you cannot say no, because the business, in your gut feeling that this might be a good one, but we're very, very, very diligent and it, in terms of really abiding by our investment criteria, and that has served us well. So post revenue, we believe in a moat around it. We like B2B mostly. B2C, we see what we can think about it, but mostly B2B. We like, my personal favorite is edutech, and then health tech for sure, agri-tech from an enablement perspective, so we avoid heavy assets and so on. And then, fintech, insurtech, and HR tech, just reflect that tech adoption that's happening over here. So
the digitization of the economy, basically everywhere, the
Absolutely.
digitization of the economy.
Absolutely.
But so the ones that you're staying away from, consumer, you're open to, but maybe not exactly your preference. Are there other spaces that you think are a bit played out, like too much activity? This is already done. I'm not going to get into this space.
I mean, look, we look at opportunities as they come, and they naturally come in waves. They naturally do. It's just how corporates evolve. Maybe there are waves that start in the US, start in the West. But interestingly, we're seeing a lot of innovative, very unique solutions coming out of our region. Very unique, very competitive, with global aspirations, with amazing founders. So we like to assess each opportunity as it comes. We have a very healthy pipeline. I'd say, cloud kitchens 2 years ago, they're still growing nicely and taking shape and form. I can't say that we will not look at another cloud kitchen. Maybe something disruptive comes, but we haven't invested in a cloud kitchen through Spartech, just to be clear. We have it through YAS investment. Mobility was, I think it was last year or a year and a half ago, all these scooters and so on. Sorry for being informal. But I hope this.
No, buy now, pay later. I feel like that space, this $100 million first round that Tamara raised, which has just exploded my brain.
And you know what? I mean, it's a lot of controversy about buy now, pay later. In certain geographies. In the UK, the Parliament were kind of discussing the end effect on the consumer. But yeah, look, I don't want to say anything wrong with any sector or the other. To be honest, there are companies that come, we assess by company, and we look at the founders, we look at the moat around the business, we look at the TAM, and then if it really fulfills all of those, then we don't have a bias with that. But maybe Omar, from your perspective, I know you're asking the questions, but what trends are you seeing? Let me learn a little bit.
I love that. Good. Well, look, I think the ones that I mentioned, some of them I've seen. The cloud kitchens, absolutely. Buy now, pay later. E-commerce enablement. Everybody wants this. People feel that e-commerce is to a certain extent matured, but the enablers, they haven't. Logistics, last mile, payment, everything related to that. B2B, certainly everyone's interested in B2B. Fintech, I feel, is so busy right now, but the market maybe is still so underserved that there's a lot of opportunities.
Yep.
Will be interesting to see. I certainly think that there's a lot of money right now. There is a lot of money, and an unprecedented amount of money. And there are very amazing opportunities for entrepreneurs these days. And in fact, I wanted to actually, with that in mind, ask you my next question, which is, with so many new funds launching, it's becoming a crowded space. What really differentiates a Spartech for you?
Yeah, so look, maybe not bound by, purely by a certain geography, although focused on it. All the other funds are great, Omar, I don't want to, but we believe in our strategy. We have our portfolio, the performance has been stellar. I think the way it's shaping up is really nice. We like, we have a few edutech companies that we're starting to find links, together. We're creating that tiny ecosystem within our portfolio right now. In terms of health tech, those are really disruptive tech companies. I'll give you an example, right? So Mango Life Sciences, it used to be an AI to increase hospital profitability in India. They have 700 medical facilities. Practo bought it. our founders bought it back later, eyeing the 30 million data records for real-world evidence precision medication. And that's impactful. 80% of the sample sets used to design medication is Caucasian. And that's, it doesn't have the same efficacy when going to other populations like us, Middle Eastern. But with Mango Life Sciences right now, and then the guys are talking to Pfizer, they're talking to the big pharmas, and they're providing real world, structured, unstructured data to assist immediately in terms of medical design. We have over there 1 million records of UAE nationals as well. So you see, it's a real impact story. This is as disruptive as it gets. And we like that. We like disruptive tech. So what differentiates us? We have an amazing team, amazing track record, amazing investment committee, and our performance right now is stellar. So I welcome you or any viewer to come, and we'll definitely be able to go in more details.
Wonderful, wonderful. And what I like about this company that you mentioned, Mango Health, is inclusivity, right? I feel like that's a broader theme that we see so much right now: inclusiveness, inclusive finance, inclusive. And that's also what you're talking about, right? Inclusive health that really takes in the data of all the colors of the population that we have, the diversity that we have. So really interesting. And we're gonna get a chance to hear more from you about some of these companies, but we're gonna shift gears a little bit here and ask you a few more fast-paced questions.
Okay.
And I'd love if you can keep your answer to like 30 seconds to 1 minute. They're mostly, name one.
Okay.
And so we should help you out. But
okay.
I'll start with name the number one thing that number one challenge that entrepreneurs underestimate.
25 seconds to go. Cash burn.
Cash burn. And you feel, what about it do they underestimate?
It's good to have your eyes on that cost, unit economics, the return on your, especially B2C in terms of customer acquisition. You need to watch it, you need to watch it closely. Also, if you're, let's say, Cloud Kitchen, you spoke about Cloud Kitchen. It's very important to have a cost accountant really following the CEO and basically, on the ingredient level, right? And, having that focus on cash flow is really important. If you don't have a runway, then what are you doing? So I think that's, and a lot of founders over here maybe tend to underestimate it. But that was a quick answer.
Yeah. Oh, I love it. And this is where they say cash flow is more important than your mother, right? And so, okay, what is one thing that will make you immediately dismiss a startup? Like, no. And it could be, something about their pitch, the founders, their attitude, the way of whatever, anything that you feel it's a big turnoff. No.
Yeah, overconfidence and sometimes ignorance of what they don't know, and not willingness to listen. That's a founder that we would like to have as a friend, but maybe not to invest in. I guess it boils down to the people, Omar. It's those people are the ones that are going to guard the investors' money, and you need to know. You need to see that they're willing to change, willing to learn, always wanting to learn. Not too kind of, excuse me, big-headed. And then they should give room for their team to speak and so on. So for me, it's at the personality level, because you need to trust they'll take the right decisions and they will be resourceful and they will ask the right people and they will be humble.
But it's amazing watching how people engage with their team can be such a tell about their leadership style, and really informative. Heard of this from other people as well, how the dynamics between co-founders as they pitch shows so much about how well they get along or less so. But great, really, really interesting answer. And this is, the other one is like, their ego, and they have no competitors. But I'll ask you another question. Tell us what is the biggest challenge facing the MENA tech and startup ecosystem today? And I'll give you some options, or you can answer other and pick your own. So is it a lack of talent, a lack of funding, a lack of regulation, lack of challenges with market size, access to customers, or others?
I see that as an opportunity, Omar. I don't see it as a problem. I'll tell you why. Look, I mean, the industry is shaping up.
Which one of them is the biggest challenge turned opportunity?
All of them, and I'll explain why. Sorry to take the way out. I have an answer in mind, right? So
good, I'll hear it.
So look, man, I mean, look, it's you look at Southeast Asia, you look at Europe, you look at the US, those are really competitive markets. They're not fragmented. You know, I mean, there's no kind of, you know, need for much more talent. You know, there aren't those challenges, right? And you have funds from all across the world just attacking that area and wanting to invest more, and high competition. Whoever has the knowledge, the guts, the willingness, and there's plenty right now, heroes I call them, not founders, that know how to scale in MENA. I think that's it's the challenges over here are actually a moat around their activities, and they can basically scale throughout MENA. And I think it's been done enough times by now for as you know, founders now know the path. I won't mention specific markets, they're all amazing ecosystems. So all of those challenges, Omar, I think those are, for us as VCs, for founders, there's still an opportunity and a good window, really. And it's unmatched, we're not as saturated as other markets. Arguably some valuations are really high. But I think those challenges exist. We need more talent all the time, and so on. But I see them as massive opportunities.
I love it. And we can keep that positive spin and look onto things. Let us turn them all into opportunities. I love that. Okay, tell us about a exciting early stage company, regional or global, not in your portfolio, that you think is a unicorn in the making, and what it tells us, like what kind of trend it's showing us.
Okay, I like a company called Move in Africa.
Okay.
They're not part of our portfolio. So as much as I would want to speak about our portfolio. Basically, I love the guys. I mean, two great founders, very smart. The type of founders we just described, we want to invest in. And basically, those guys cut a deal with Uber in Africa and several geographies. They're in Nigeria and Ghana, I believe, right now, and expanding throughout. And it's it's also a fintech play. So I'll tell you how. Basically, Uber wants to reach equilibrium in terms of the number of cars and so on in those geographies. There is an opportunity in terms of, kind of financing car purchases as well to supply those Uber drivers. And the guys just cut an amazing deal with both Uber. They've cut an amazing deal with the banks they have. They thought about currency hedges. And they're also efficiently using their capital in terms of, equity and debt and that distribution. And those guys are going to grow really quickly, and then move into different verticals where essentially what they're doing right now is financing the purchase of cars for Uber drivers and then calculating the number of trips that it will take for them to pay off those loans. And they make it easy for everyone. That portion right now that they will grow very quickly, and I think they'll become a unicorn very quickly as well. So it's out of my, kind of.
No, I love it, and it's kind of like a financing for the sharing economy, for the circular economy. I could certainly see totally the appeal of how empower yourself to run your own micro business, and that's
exactly
an Uber driver.
And this is an example, Omar. You mentioned fintech, right? And fintech, vast opportunity there. And you see a lot of different entities eating away at it from different angles. And their angle is just sweet. Like, honestly, they've got a good chance of scaling really quickly, reaching all the way to the consumer and also beyond to corporates. And then the sky's the limit. So I know you understand where I'm going with this. But yeah, Move. I like the guys, most importantly.
That's the most important, clearly. Okay, tell us on the flip side about a business that you lost money on, or a deal that you lost money on, and what it taught you. And if you don't want to talk about a deal, you can talk about a place where you failed. But I like an investment, whichever is preferable to you.
I don't remember losing money, to be honest, in any deal I worked on. So hopefully this keeps going. It's
Knock on wood
every
for
deal.
you.
So far,
Okay.
I mean, hey, we're a new fund, right? And VC, anything could happen, any turn could happen. We've got amazing startups, so I think we're really well diversified, but they're all growing really quickly. They're growing really quickly. They're doing really well so far. So that's on the VC scape. It's a year and a half in the making. So hopefully it will continue. There's no reason to think it will not continue. I mean, personally, I was always an investor in equity since I was 12 years old. So, I lost, I made money, but, so are many, citizens over here in the UAE. I remember, during the stock market days, it was usual for us to have conversations about making money there. But I did lose money there as well. So not a good feeling. But losing my money is one thing, but this is investors' money, Omar. It's it's a big responsibility.
Indeed, it is. Indeed, it is. But well, thank you for that. It was really fun and some great insights. Appreciate that. I want to take some questions from the audience. I have one already from the audience, and actually, it's one that I wanted to ask you because I felt you said we do 100 to 700K in seed rounds as your usual ticket, but then you also said you're looking for. Okay.
It's not seed rounds. It's post-revenue, Series A, maybe seed, depends.
Okay. So and then the question I'm not sure it's Ali Mohsen's question, but for me, the way that I would ask it is usually a company that's post-revenue is looking to raise a larger amount at a higher valuation. So are you generally a smaller part in these larger transactions? Because all the post-revenue companies that we're seeing there, we're talking about they're raising Series A somewhere in the $5-10 million range at that point.
I mean, you're right. And look, we have different skill sets across the board. We've got, and we help our startups out. And therefore, we got a lot of inbound, like we just add value. We want to add value in any way, whether connecting them, whether on the financial side, our expertise, or our turnaround and operational expertise. So that gives us a seat and a lot of those investments. And ticket sizes are a function of the size of the fund. We're targeting a 70 million fund. As we get there, ticket sizes are going to increase. Some investors would want control over there. Right now, the way we're practicing influence is in a positive way. I mean, first, we like the companies we invest in, and they like us, and we always have room to give advice and add value. As long as we can do that with a good choice that we make in terms of sticking to our portfolio criteria, then so far so good. But you're right, ticket right now is relatively small for the stage, but that is growing.
What's the fund size that you're aiming to close eventually?
$70 million.
Okay, 70. Okay, clear. And I was going to ask you, because you also have a lot of exposure to family offices, and you work with family offices, and you've worked with corporates, large corporates, sovereigns. First, what do you think of the exit opportunities in the region? And the second is, how do you see family offices evolving in their role that they play within this?
Within VC, sorry, within VC, right? Of course.
Yes, within the VC, whether as LPs, could be as acquirers, could be as, there's right now I feel there's that missing gap. There's not, the big players are not acquiring. And that's why I ask these questions together, because I wonder how, if you see that they're related or not, but exits and family offices, would love to hear.
Very related, very, very, very good question. So basically, look, I mean, first of all, in our platform, we have 3 verticals. We have the first vertical is a family-oriented vertical, where we did the asset allocation for our family in terms of strategy and execution. And now we're speaking to our friends, let's say. Second vertical is advisory, where we kind of advise on M&A transactions, and a lot of families involved there as well as institutions and sovereigns. Third one is funds, where we have Spartech Ventures. And right now we are pioneering the venture debt space, inshallah, and we want more people to come along. And we already did execute on a lot of transactions. All of that gives us a good vantage point. I mean, we look at it from different angles. So I'll first take a stab on the exit bit. I think this is building up. Look, there's a gap in the growth stage right now. Very well needed. We have our eyes on it right now. We need to we want to help in terms of the ecosystem, getting to that stage. So I think also fund of funds over here are very conscious about that and are gearing up to finance that stage. That's a good bridge towards exit. I think we've seen a lot of international funds right now increase their focus on the region, and we've seen several exits from the region so far. So that's not unheard of. You've got SPACs, the Anghami story. A lot of respect for people behind it. We actually know them, and that's an avenue, right? And we know like public markets over here in the UAE and Saudi are also, pushing really, really hard in terms of facilitating that market for those exits. So I think avenues are there. There's an element in VC where you need to understand how it's shaping up and assess that in a few years' time, it's building up towards that goal. But I see huge harmony between the sovereigns, between governments, and between the startups, and a lot of trust that goes around with action in terms of deployment that provides a good solid groundwork that makes us trust in terms of this momentum continuing through later stages, the growth stage and further. So that's on exits. We see avenues opening up, and then it depends on the startup itself. Maybe the startup is positioning for a strategic. They're a smaller software into a bigger software, and they're already lining up those conversations. Maybe it's a listing. It depends on the nature of that startup too, as you would understand. Now, family offices in the region over here are right now, becoming more and more focused on that space. Depends sometimes.
Even the family offices that I hear from, a lot of them, their go-to-market strategy for this space is, I'm not sure I want to invest in a regional startup. Let me go find best in class in this market operating in London, Paris, New York, do a joint venture with them, bring them into the market, which unfortunately doesn't help the development of organic homegrown unicorns that can compete with some of those global players. I'm not sure if you're also seeing this or if you expect this to change in any way.
No, look, at first I expect it to change. I see the trend towards the positive for the industry. And I see families over here, some of them, some of the most successful startups over here actually have been started by some families without naming names right now. However, I lost my train of thought, Omar. Excuse me.
Sorry, I interrupted you. So we were talking about the family offices, the question of working with local players or collaborating with global ones and bringing them to the market.
Look, those family offices have family wealth. It's money that needs to be protected. Downside element is key. Income generation is something good. And then there is always this small allocation in the large scheme of things, which makes sense if it goes to VC. I think right now, a lot of families are realizing that the opportunity over here is ripe, and we are we are at the start of our own ecosystem mushrooming, in my view, whereas it has in different regions. However, we've noticed that they're moving towards in the risk reward metric in terms of risk appetite, just easing their way into that comfort level, especially with the multiple decision makers in many of those. And we've seen some move in the past few years in more late stage US based companies. And that makes sense too. It's a nice strategy. I mean, it's very predictable, good names. If you get access to those, I mean, not a wrong strategy. But I think as more exits came out of the region, and really, people make a lot of money with those. I think right now families are very comfortable. In fact, they're leading the way in some startups over here. And then I have to say, I'm a part of the Emirates Angels Association. It's headed by the chair as Masoud Rahama Al-Masoud, a good friend and an amazing board that consists of some of the biggest families over here that are actively discussing startups here from our region, and actually also investing from an angel perspective, moving towards a more institutionalized way in terms of backing certain funds. It's a market. I think it's heading towards that direction. We haven't seen many deploy in local funds. In fact, a few. But I think with time and with more exits, more success, it will be obvious how exciting our region is. I hope this kind of touches on answering your question.
Yeah, look, it does. And I think we are seeing it. I think you really answered it most with the question of wealth preservation versus maximization, and the impulse to preserve wealth versus really take a lot of risk on that front. I think it's a key insight here, and but I think that they have a critical role to play, especially as family offices today in our region. They're not just the places where there's wealth, but they are often the operators of the region's largest businesses that could be the right strategics investing in some of these players. So we really need activity on that front to unlock exits, to unlock growth stage capital, as you mentioned, and strategic partnerships, because I think this is critical. And especially as all these businesses are moving towards digitization, it's easy to go to a Deloitte, to a McKinsey, to a Booz. The question is, will you go to a startup or a scale-up? Let's not even talk startup because those are too early. Yeah. Scale up and acquire them to be leading your innovation activities or your digitization activities. I find that to be a very compelling step. But
look, I just want to on that. You're absolutely right. We're seeing it in action. You know, we have some companies right now where some of the largest families participated, both in the UAE and in Saudi. And we've seen when things got tough on the companies, those families who understand business generation after generation, honestly, you know, I mean, you see the difference. I mean, just the strategic value add is very important. So I totally agree with you. Families play a critical role over here in terms of making it work. And I have trust that this is happening.
Wonderful. I'm going to take a question that we have here from our audience and maybe wrap up shortly after this. And the question really is about, you know, with the challenge with Google's position today regarding advertising, would you be interested in a business who can step in with a new model of advertising and engage B2C customers for retail? And so I might even make this a bit broader, and I would say, are you interested or open to companies within the media and advertising space or with media and advertising business models? And do you believe that there's an opportunity in this space within the hegemony of Google?
Okay, look, I mean, you know, I don't think maybe I might not understand the specific ad business, you know, from the perspective you're asking it. But again, I mean, I think if there's an opportunity, data and getting to those eyeballs, and that's kind of a very core, you know, thing. Google has a big grasp on the market, on the ad market. You've got Amazon, you've got, you know, you've got Facebook, you know, and then each one addresses that, you know, consumer and funnels those ads in a different way that work nicely. And then those guys are empires, you know, it's big companies. And I think, you know, there's always a chance of disruption, and those are always also potential exits. I wish I can give you real life examples.
No, I mean, here, I'll ask you actually a more broad real life example. Clubhouse. Mm-hmm. I saw numbers about Clubhouse that were really kind of amazing about number of downloads. And in January, it was in the tens of millions. In February, it was in the ones. In March, it was like in the hundreds of thousands. And while it went through this peak, crazy peak, now everyone in the big media players are planning to put out copycats. You talked about investing in companies with a moat. I'm not sure that they have any real moat around them. And we're seeing a business that essentially, I think, is just going to get booted out. But I'm curious if what you see is really the question of, is there a room for people to grow in the shadow of these massive companies?
Always there's room. I'm always an optimist. But again, from our perspective, we're very conscious about cash burn, B2C. I mean, all these metrics for us, just for our strategy. I mean, there are investors for things like that. It's just kind of, I think there is always room, the opportunities always start up, but those are giants as well, Omar, as you can imagine. I'll look into it, but I have trust that there's always opportunity.
Wonderful, wonderful. Yagub, thank you so much for being with us. What a positive conversation, and really, brought a lot of energy to this. Thank you so much for joining us. Thank you to our audience, and we'll look forward to keeping in touch and hearing more great successes coming out of your fund and your many companies, and also of your portfolio companies.
Omar, thank you so much for the learnings, and the viewers, really, thank you, and for the great questions. And this was a lot of fun. Let's do it sometime soon.
The pleasure was all mine. I really enjoyed it as well. So thank you so much. Take care and have a great evening. Thank you, everyone.
You too. Ma salama.
Bye-bye.